Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number, and you pick up the phone and give us a call. You can certainly email us, info@malibufunding.net. We have a Twitter handle at Jeff6493. I have a blog, bartonblog.net. There's a lot of ways that I try to get the message out. I was just telling Daryl off air that we are doing a mortgage minute on my Twitter account, which is at Jeff6493. So if you're looking at information, up-to-date information, daily information, weekly, however it is that you need some more encouragement or discouragement, depending on the weekly show. And by the way, the news coming out of Washington is not helpful. The economic news is vague, if best. So if you're looking and... Yeah, anyway, I'll get to that. I'm Jeff Barton. Thanks for listening to the show. KMET, KCAA, and K-Tahoe are three affiliates, and we're on at KCAA on three different signals. They have a couple of FM signals. This is all out in San Bernardino and Riverside counties. We do hit L.A. and Inyo and some of the other areas, and certainly up in the Tahoe area. Great skiing. Daryl, you've been up there recently? What's happening up there?
No, I've been keeping an eye on it. Yeah, there's lots of snow.
Lots of snow, and anybody in the local area knows it's been raining like heck. A lot of road closures. Fires ripped through my area, and now we've got mudslides. So California is full of a lot of different things. I actually wrote an article, and a very long article for LinkedIn, a couple days ago. I didn't get a lot of response, but I didn't expect to. Usually, and maybe you find this true out there, and maybe Daryl can comment, when you're commenting on social media, unless it's of a certain ilk in a certain vein, you're not going to get a lot of reaction to it. Like if you're contrarian, you will. If you're trying to pitch a point that's either for or against something, but anything outside of that, you're not going to get anything.
If you try to state something as fact and it's just historically off center by half a degree,
right,
people go nuts.
Yeah, right.
But if you take a position that is contrary to the norms of society, yeah.
Well, so what I did, and this is what I believe. Okay, what I said. Oh, there we go. We got phones ringing already. What I said was, the economy is gonna have some problems late this year. And I said that we're probably going to see a recession in late 2019, early 2020, before the election. And there's a number of reasons for that, a number of reasons why I think that. But predominantly, it is about what happens in an economy where we've got guarantees for some, yet the entree to some of the higher paying jobs is going to cost you. And what do I mean by that? I mean, if you're out there right now and you're thinking, okay, I've got a son or a daughter, a grandson, granddaughter, even myself or my husband or wife or significant other or any friend, and they all want advanced degrees in order to go and get the highest paying jobs here in Southern California or in the tech world up in the Bay Area or any number of professions that require it, you got to spend big money to go out there. I mean, I'm not kidding. If you're going to get an 18-month Master's of Business degree, it could cost you upwards of $50,000 to $100,000. And if you have started from, a undergraduate degree all the way to the master's, it could cost you over a couple $100,000. It's
easily,
yeah, right?
Easily. The undergraduate will normally cost you more than the master's because the undergraduate's 4 years and the master's 2.
That's right.
Yeah,
that's right.
There's huge differences. I went to Cal Lutheran.
Right.
Thought about Pepperdine, but it was twice the price.
Right, and I think that is what is dictating what's going to happen in Los Angeles area, for instance, and it's happening all over the country. It's not just here. It's happening in a lot of places. The mandated $15 an hour, right? Okay, so you say it's $15 an hour, but entry-level jobs in this country have gone the way of Sears, and you may have seen Sears is about ready to go BK, and they're almost being, out of business, which is unbelievable.
Well, pretty much, and plus Sears' number one business is real estate.
That's, like McDonald's. So what happens to the entry-level person when they get out of high school? Where do they go for a job? How do they get a job? Because what happens if at McDonald's or any number of other smaller businesses that employ high schoolers, they now have to, pay $15 an hour, or soon will in many, many major cities. $15 an hour is $30,000 a year. Daryl, do you know what the average salary in the U.S. is? $27,000. So you are mandating that people pay over the average salary in the U.S. What happens to a worker who is unqualified to do anything else except work at McDonald's? At $30,000 a year.
Well, plus, depending on what area, Southern California, $30,000 a year is not going to pay your rent. It doesn't allow you to establish yourself independently. You still have to,
Well, my point simply being is that it was never supposed to be like that. There are, like in the real estate world, we call them entry-level homes. In the employer world, we call them entry-level jobs. You go in, you get a job, you work for a couple of summers, you get your college degree, and you move on. Now you're going to have full-time, long-term employees who stay at jobs who are unqualified to do anything else because they can't afford the education. Therefore, there's no mobility for first-time job seekers to go from the summer job after high school to then get the college degree to move to something else, unless you get a subsidized or you go for loans that are going to put you $200,000 and $250,000 in debt before you start.
And a lot of those employers at this point will not employ you full-time because then they have to offer insurance and a variety of other things.
That's right.
So a lot of the employees, they will employ 30 or 35 hours a week and not 40 hours a week because it brings on a whole nother machination of stuff that they have to offer.
So when we're talking about, and I agree with that, why I think the economy is in trouble is because presenting yourself with a situation whereby there is no middle ground anymore. If you want a high-paying job, if you want a professional job, you're going to go into debt. Locally, in Southern California, there's talk of a large teacher's strike, okay? Now, these people don't make any money. I think the top-end salary in L.A. County is, about $53,000, $60,000 a year?
Something like that, and then they pay for their own supplies to teach.
That's right, That's right. Now, of all the things we should be spending money on, this is one of them. Of course, it's a county-by-county, district-by-district issue. It's not a state issue, and therefore the money that is afforded to the school systems themselves come out of usually property tax, which, again, is an issue in California where you have disasters and the inability by which a local municipality, let's say you're in one of these areas that was hit by either a fire or an earthquake or a disaster, you just had half of your revenue wiped out because the property taxes have to be lowered because there is no property there anymore. So you get a combination of weather disasters, the employment situation, which is untenable, the debt problem that we have with students coming out trying to get into the economy. That's why I think the economy is in trouble. It's one thing to have a government-sponsored boost to the economy, which is what we had last year with the tax cut. I mean, let's face it, if you go from a corporate tax of, I think it was 39%, and you drop it to 22%, that's corporate welfare, which is fine. The economy boomed. We were at 3.8, 3.9% GDP. But that is not going to be sustainable because you can't cut taxes to nothing. As we see right now with the government shutdown, it is not easy out there for some of these people who can't get paid to spend money on it. 800,000 employees, which may bleed over into, the end of January, the end of February. So, in my opinion, if you're looking for a good deal in real estate right now, and we're talking about next year possibly having this recession, which I think is going to happen, I do think it'll be a mild recession, but I think it will affect real estate prices, but it won't affect necessarily the mortgage rates. I think we're going to see mortgage rates rise this year, maybe not as rapidly, and we'll get into that maybe a little bit later on in a different segment. But I think you will see the employment tighten, meaning that those jobs that are out there and available right now may not be available in a year, which means that there'll be more people applying for unemployment, even though currently we have the lowest rate of unemployment that we've had in 40 years. It's kind of amazing. But this is my prediction for next year. I hope you disagree with me. Give me a call. 888-713-2929 is the telephone number. And disagree with me so we can have a nice, healthy discussion about what's happening because it affects your ability to get a mortgage and your ability to buy real estate. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. Telephone number. Pick up the phone. Give us a call. Talk about real estate. Talk about all things that you need to know about real estate, about mortgages, about things that are going to affect your decisions positively or negatively. And I think you really got to weigh out a lot of the options this year. It's an interesting year, both in real estate and in mortgages. I wanted to bring a few people to the show today. Julie Peisner is with us, and she's with Sotheby's International up in the Bay Area, up in San Francisco. Julie, how are you?
I'm well, thank you.
Okay, excellent. Holidays good? Everybody good?
Yeah, we're just getting back into the swing of things.
Right. Kids back at school already?
Kids are back at school, yay.
Okay. I know. It's like the vacation doesn't begin until the kids go back to school. I often say that.
I know. It's a lot of work,
Yeah, it is.
2 whole weeks.
Yeah, it is. It's a lot of work. Okay. Tell me, what is happening in the Bay Area in terms of both availability and prices for residential real estate?
So, right now, it just, it always slows down during the holidays, like right before Thanksgiving usually.
Right.
You start to see inventory taken off the market because nobody wants to buy during the holidays.
Right.
And but historically in San Francisco, the spring market really starts quite early,
okay.
Usually around the end of January, early February. So although right now it still seems a little bit kind of slow starting, we're starting to see a pickup in the inventory of,
right.
a lot of things that were taken off the market during the holidays are now coming back. And, usually, like I said, historically, the hottest market is usually in the early spring. That's when you see the spike in prices and lots of multiple offers. With the volatility that's been going on this last quarter and, just in general, market slowing down, it's hard to tell what's going to happen. And, of course, you can't, see the market until you've passed it.
Of course, yeah, it's all hindsight.
Yeah, it's all hindsight. So I think, as you're probably aware, there's a lot of kind of uncertainty going on, especially with, the market volatility and the government shutdown
right.
and everything like that. I think buyers are very cautious right now.
Agreed.
Yep. But, the upside and what I tell my clients, which I believe, is that, if you look at real estate historically, it has always done well if you hold it for long enough. Mm-hmm. So, despite fluctuations in the market, if you buy real estate and hold on to it for, 5 years,
right.
you will most likely do fairly well. And with, if you're scared about the stock market because it's so volatile and one day it's up, 700 points and the next day it's down 600,
Yep.
You put your money in real estate.
No, I think right. I think there's always a flight to real estate when the stock market's, bad.
Yeah.
I think.
And interest rates aren't that bad still.
No, they actually came down last week.
Exactly, they came down. The Fed has promised only 2 rate hikes this year instead of 3. So, I still think real estate is a very solid, strong, safe bet. I don't think the flipping market is, going to be really super hot,
right?
Unless you have a lot of cash to invest. But, we still suffer from very limited inventory, and we're still increasing our population and jobs and everything. People want to live here despite the rampant homeless problem and the fact that things are cost of living is expensive, but it's a great city to live in,
right?
And to be near, so people are still coming.
Okay, so prices, have they actually leveled a little bit, or are you still seeing the increases that we did last summer?
It depends on the market sector.
Okay.
prices have definitely come down in what we call the luxury market, which is like $1.5 million and over.
Okay.
And there's like 3 segments of that market as well, like from $1.5 million to 3, and then 3 to 5, and then anything over 5 is kind of like a different game. But prices have definitely fallen over, in the higher end of the market. In the lower end of the market, anything under $1 million, that market is still pretty hot, and prices, are still going up.
Where do you have to live if you get under $1 million?
Almost not in the city.
Right. Right, exactly. You're over in Oakland? Where are you?
Well, I mean, you certainly still get condos under $1 million, but there are some areas that are just on the, kind of tippy outer skirts of the city, like closer to Daly City, where you can, if you're lucky, still get something in that range. I'm not saying it's $1 million exactly, but in that
Right,
range.
no, I understand, sure. Okay, so let's see. Are there any areas of the city that you see that might be a potential for a good deal? I mean, is that something that even you can utter those words at this point?
Yeah, I know. Yeah, it's kind of interesting there. I always tell this to clients, like, there are no deals to be had in San Francisco. The deal is if you could get into something with a reasonable interest rate, at a price you can afford, like, that's your deal.
Right. If you can afford it, then that's the deal, right? I get that 100%. Okay, tell us a little bit about Sotheby's, and then a little bit about what's happening in the real estate, in the business world in the Bay Area.
Yeah, well, I recently moved over to Sotheby's, so now we're, literally at the top. It's, very high-end luxury brokerage, and we only have one office in San Francisco, which is great because Compass, the powerhouse real estate company based in New York, has come to town and swallowed up a lot of our independent, smaller brokerages, which, it still hasn't really. It just happened in the last 6 months, so it'll be interesting to see how that shakes out. We've seen some attrition to other companies,
sure.
And they're like the 800-pound gorilla now. And I'm not saying that they're bad. They're a very high-tech firm, which is very interesting. But so that's kind of what's going on in the real estate world in San Francisco. But I'm happily at a company that's been around for generations and services, luxury properties and is at the top of their game. So I'm proud to be there.
I've seen an entry into the marketplace of a lot of different discount realtors. Is that taking hold up there, i.e., you do all the work and don't pay commissions and nothing like that?
Really. We try to keep them away because you know what? In San Francisco especially, it is such a high needs, very intricate market where there are so many different property types that you really need a good agent to navigate all the ins and outs for you. And, we do have Redfin. They're probably one of the bigger, the discount brokerages. But they don't do a big market share. And they mostly, I would say, represent the buyer pool and not the seller pool.
Right. I think there's more. It's easier with the buyers because, they don't expect as much, and it's easier to them.
It's a tough business
to
be in real estate here, and so I think those, the discount brokers stay outside of the city. There are, like in East Bay, South Bay, they exist more out there, where it may be a little bit easier. But this is, it's a pretty complicated market here.
I agree. Hey, Julie, shout out your phone number for those who are looking for a terrific agent up in San Francisco.
415-823-0824. You can text me, too.
Excellent. Okay, so we have about a minute left. Give me your idea as to where we might be headed in terms. I've predicted a recession later in the year, and how that might affect real estate prices.
I think everybody's waiting on this recession to happen.
Right.
And I think, a recession, in hindsight, I wish I had bought in, something in 2008-9, because we'd be
very happy right now. Right, so exactly. You would be very happy.
Point to it being a great buyer's market this year.
Yeah, I think that's the upside, right? We're always
Yeah.
looking at the downside, but the upside is, hey, if you've got money, maybe wait a little bit and buy
Yeah.
when the prices come down.
Exactly. And
Ju-
you know, you can never time when the bottom's going to be, but
Right. No, you want to buy on the down as opposed to buy at the top, right? I mean, that's
Exactly.
essentially what it is. Julie, thank you very much for coming on the show once again for
welcome.
the update from San Francisco. Are you there?
yeah.
Okay, thanks very much for coming on. I was like, well,
You're
she already
listening to
left.
The Mortgage Voice. with
Bye-bye.
Jeff
Bye,
Barton.
thanks very much.
We'll
Okay,
be right
I'm
back
Jeff
with
Barton,
more
your voice in the
just
mortgage
a moment.
industry. We'll
For
be
more
right back.
information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number. If you pick up the phone, give us a call. We can help you answer questions that you have right now about whether you're going to get that house that you've always wanted, whether you want to sell the house, what you're going to do with the overflow of money. Maybe you should buy that investment property to get you some residual income into your later years, or maybe you just need to take money out of your house in order to pay for that college education for yourself, your son or daughter, your grandchildren. There's all kinds of things that you need answers to, so give us a call, 888-713-2929, and that's our telephone number. info@malibufunding.net is my email address, and if you want to follow me on Twitter, it's at Jeff6493. Now, people have often asked me what 6493 is. It's nothing. So it was just a couple of numbers that came to my head, and it was a good thing to tag on to my Twitter account. So at Jeff6493 for the Twitter account. Bringing to the show once again another great guest from up in Northern California is Darren Woodworth. Been on the show many times updating us. Darren, how are you?
Oh, super fantastic. Thanks for asking, Jeff.
And thank you. How was your holiday season? Everything okay?
Oh, nice and mellow. It was a good season.
Yeah, I know. I get to spend some time, although one of my sons is now working. Actually, two of them are full-time. So only one of them could get to come down to Southern California where I live, and that was sad. But my daughter was there, so that was nice. So four of us had a nice little holiday for the Christmas as well as New Year's. And yourself?
Oh, good. Yeah, I have my son. He's in San Jose, so
Right.
he's 19, 6'9". So
Oh, my gosh. Wow. That's amazing.
yeah.
That's pretty fun. I'm glad you spent some time with him. That's really a good thing. Hey, listen, I wanted to get caught up with you as to what's happening up in your area. And could you just remind the folks where you work and the areas and the cities that you cover? That'd be great.
I'm actually out of Napa, California, Vallejo area.
Right.
So I just moved from San Jose area
Uh-huh.
4 years ago, so I cover anywhere from San Jose all the way up to Clear Lake, Lake County. Just sold a property a few months ago in Magalia,
Okay.
which up by Paradise, which just burnt down.
I know.
So
It's awful.
I'm dealing with that right now with my clients rebuilding on that property.
I see.
So
yeah.
my range is wide.
Let me ask you about the fire situation. You have some clients that had their houses burned?
Yeah.
Okay. How are they dealing with that, both emotionally and physically?
You know what? They were renters for 35 years when they purchased this property off my client, and they're troopers, man. They're back at it. They're like, when do we start rebuilding?
Oh, that's good. Is the process any simpler there than it is down in Southern California? Because down here it's a little bit more cumbersome with each city getting involved more heavily.
No, they're actually moving forward, so
Good,
it's
excellent,
a little bit easier.
excellent. And on a rebuild like that, are they able to actually assemble the same kind of property, or do they have to upgrade to the current codes?
Similar. So what we have right now, I just came up with was the one-time close program. So
Okay.
they will build all the way up until the final building date, and you don't pay a mortgage until that final build.
Okay, so basically you get your your certificate of occupancy, and at that point you switch the mortgage, or you maintain the same mortgage?
It's switched at that time.
Right, and you get a I guess a regular from a building mortgage or a construction loan to, and you switch it over to a mortgage. 30-year fixed is usually what they are. Is it the
Correct.
same loan company, or is it two different lenders that you use on something like that?
That was just one lender.
Oh, that's excellent. Okay.
Yeah.
All right. So give us your estimate as to what's happening in the real estate market up there. I know that you're busy and you do a lot of business up there. So have you seen a change? Is it the same hustle and bustle as it was a year ago or 6 months ago?
So I moved from San Jose 4 years ago. The house I moved from was 600,000. It's $1,300,000 right now today,
Wow.
which is
Wow.
crazy.
That's crazy.
So Vallejo, where I live now, is the last affordable city on the bay.
Okay.
I'll say that again: last affordable city on the bay. You could still get a house up here for $300,000-400,000. You could get on the ferry right here at the marina and get to San Francisco in 40 minutes.
Wow, that's
5
great.
minutes. Yeah. And actually, they're building out the marina right now. They're building out a senior center living, and then a river walk with a park. And once that gets built out, I see Vallejo turning into something like Alameda used to be, where you could buy something for $100,000 and now you can't buy anything for $1 million.
Wow, that's amazing.
Yeah.
Now, how do you get to Vallejo? Because I'm from down here, I don't know.
So Vallejo's right off of Highway 80.
Okay.
So we're right 40 minutes past Oakland, 50 minutes past San Francisco.
Okay. So and as
So the next city up is Napa, California.
I see. Very well.
Yeah.
So basically, the prices are good right now to get in, and like you said, it's an affordable place. Are they building a lot in Vallejo? Obviously, you said the marina, but are they building homes?
Mare Island's starting to get built out right now. Mare Island was a naval base, for a while, so now they're starting to build that out. So once that starts getting built out, the affordability will be history.
Okay. Now, we've heard talk of recession. We've heard talk that prices overall are dropping, although real estate mortgage rates have dropped in the last week or so. We have seen them on the rise. How's this affecting what you do in your area?
So I'm a realtor and a loan officer. So I have a listing in Napa coming up at $585, 4-bedroom, 2-bath.
Mm-hmm.
That'll go on the market February 1st, and it'll be sold within a couple days. So the market up in Napa is not hit hard at all. So.
Well, that's still in a wheelhouse for a lot of people, right? $500,000-600,000 range. I mean, a lot of people can afford that, especially those that are, having pretty good jobs. Do most of the people in your area work in the area, or are they all commuting?
It's half and half, really.
Mm-hmm.
So Vallejo is $300,000-400,000 right now for a 3-4-bedroom house.
Yeah, that's very good. How are the school systems up there for that?
Schools are struggling, but now they've got the charter schools that just came out, so they're revamping the school system, so that's changing a bunch. Yeah,
I know. There's a lot of talk down here in Southern California of adding more charter schools, and of course the unions are against it, and a lot of the teachers are a little bit afraid of it just because it's something different and new. Where do you fall on that, and how are your customers reacting to one or the other?
It's hit and miss, because I just sold a property for a friend last year, a year and a half ago in Vallejo, that wanted to move his kid to American Canyon, the next city over, 3 blocks over, because of the school system. So since then, that school system's come around, because many children have left Vallejo High. So they're starting to get the message that they need to do something different.
Right. Yeah, I think that it's probably one of the, other than location, right? School system is the number one reason why people move to a certain area.
Absolutely.
Right.
And that's probably why you can still get homes up here for $300,000 and $400,000.
Right. And in that, obviously, solving the problem of education, it's certainly not what realtors or mortgage loan officers do, but it is a problem that we have to deal with and answer every time it's asked. How do you answer a question like that? Do you refer them off to, the county site where they can look up the scores themselves? Do you give them an honest assessment? How do you handle it?
MLS pulls up data that I got that kind of points them in the right direction. So there's a lot of A lot of questions that need to be answered.
Yeah, no, I agree with that. I mean, it's so sensitive, and with the advent of the super agencies that have thousands of agents, they have all kinds of policies and procedures. Versus what most realtors are, they work at small shops. So how are they supposed to handle it versus a larger company? There's a lot of complex issues to it, and I think there's certainly public data on it, and making that available for customers trying to look for answers is probably the best way to do it.
Yeah.
Yeah. Okay. Yeah, we got about 30 seconds. Prognostication for this year. Where are we heading price-wise on real estate?
I think it's 3-4% rise still.
Yep.
In my area.
Yep, that's what I'm predicting too. 3-4% versus 6%, was 6.5% was what we had last year.
Correct.
Yeah. Okay. Hey, Darren, thanks very much for coming on the show once again.
Absolutely. Thank you.
Thank you very much. It's Darren Woodworth. His telephone number is that 408-425-7845, Darren?
Correct.
Okay, excellent. If you need a terrific loan officer or real estate agent up in the Napa area, give him a call. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. Telephone number. Pick it up. Give me a call. I can answer questions. That's about as succinct as you can get on the radio. Just eliminate all prepositions and pronouns and just get right to the heart of it. One of the people that have been on the show many, many times talking about what's going on in Atlanta is Luana Bradford. She joins us again today to give us an update as to what's happening in that amazing city and what's happening in her business. Luana, how are you?
I'm doing well, Jeff. How are you?
You know what? I'm okay, although I got a little frog in my throat. I don't know why they call it a frog, but it's just one of those things that has tickled me the entire show, but I'll get through it, and thanks for asking. How are you?
I'm doing well, thank you.
Excellent. Okay, business-wise, what's happening down in Atlanta?
What's happening in Atlanta? Well, we're just off the holidays, so
right.
Things are just starting to pick up a little bit. I'm getting some inquiries, primarily out of concern from home buyers.
Right.
Regarding, what's going to happen with the rates.
Yep.
Should they purchase now or should they wait? And with investors, it's pretty much the same. They're just fix and flip, and so they're good either way. It doesn't really matter what the rates are since they're in for the short term.
Okay, fix and flip, is that still happening in Atlanta? People are still able to look at the market and say we're going to have real estate rise by X amount, and if I buy right, I can make it work?
Yeah, they are. It's happening more so in the suburbs because within 285,
Yep.
People are still trying to find good deals, but it's like looking for a needle in a haystack.
Yeah, I know. I've talked to a couple of other people on the show today in distant cities, and they tell me the same thing, that if you're looking for a deal, there is no deal. Getting into a house is the deal, but...
Right, yeah, because it's a seller's market right now, so...
Okay, and if you're saying suburbs, give me the name of some cities that you may be able to find something you could fix and flip.
Oh, gosh, going out as far out as Ackworth, in Duluth,
Okay.
Marietta, those are some areas, Fayetteville.
Yeah. Wow, that's far.
Yeah, and it's still considered Metro Atlanta.
Well,
but you're just not in prime real estate anymore.
okay, price-wise, where are we heading in the metro area? I mean, are we seeing the appreciations the same way we saw them last year, or is it like a lot of cities, the appreciation is going to be tempered?
It's projected to be tempered, but we're still climbing.
Oh, you are still climbing. So the demand is high, and people are still looking to buy.
Right. They're expecting, the latest that I heard, Fannie projection within the Atlanta market was about a 4.7% increase. Is expected for 2019.
Okay, that's very similar to what I just talked to a real estate agent up in the Bay Area, as well as up in Napa, and certainly in San Bernardino Riverside. We're about the same, 4.5, 3.5 to 4.5%, which isn't 6.5%, which is what it had been the last 3 years running. So it is coming down a little, but it's still rising.
Yes.
Okay, employment. What's happening with your area in the employment sector? I'm nervous about, just an impending, and I don't know if you've even heard about this or thought about it, recession on the horizon, and how's it affecting employment? Does it? Do you even talk about it? What's going on with that?
I don't hear much about that right now. I know 2020 is like the anticipated date that we're going to slip back into a recession.
Right.
But the main concern is, with this recent partial government shutdown and the long-term impact it could have on the economy.
I agree. I was trying to explain why it's important locally to talk about national events. It's because, things that may not seem to affect you really do affect you, and they affect both the price of products you pay for, price of services you do or do not get, and so that always affects the bottom dollar and how much you can afford a house.
Exactly.
So, okay. You are you're obviously in the mortgage business, but you also do a number of other things. Can you explain to our audience some of the cool things you're thinking about doing this year?
Some of the cool things that I'm doing. Well, one of the things is I am facilitating. I'm part of a national organization called Women's Prosperity Network. Mm-hmm. They're based out of Florida, and I facilitate the Atlanta chapter. And the exciting thing about it is we're focused on women that are looking not only to change their lives, but the lives of their family and the communities that they serve through improving their economic buying power and influence within the marketplace. And one of the things that we want to do this year is actually host a seminar that's tailored for women to help educate them on real estate, whether it's looking to buy as a homeowner or looking to invest, and what does that mean as far as aligning that with your long-term portfolio? Okay.
People who come to these events are business people or consumers?
Business people and professionals, so
okay.
You have both.
Okay, and are you looking to have these people invest or these people be in the mentor position?
In the mentor position.
I see. And so they go out into the community and educate people who might not necessarily have the information so that they gain confidence enough to try to invest in real estate in order for long-term financial goals?
Exactly.
I see. Okay. And what's the name of the organization? How would one get a hold of that? I'm sure people in the San Bernardino Riverside area where the show is being broadcast, as well as up in Tahoe, would be interested in something like this.
Yes, it's womensprosperitynetwork.com. So that's womensprosperitynetwork.com. And they can look at where the different chapters are located. And definitely you'll see the Atlanta chapter. So those who are in the greater Atlanta region, if they want to tap into what we're doing locally, we'd love for them to be a part of it.
And what do you do? You hold educational seminars, or you just train the people who come to the meetings to go out into their own particular sphere and spread the word?
Sure. We have monthly masterminds locally.
Okay.
And the masterminds is where we're getting together, in collective thought to help. It's sort of like an iron sharpening iron to help propel us to the next level, whether it's in our businesses. So some people are just struggling with how do they strategically plan for their business, how they position themselves for growth, price point marketing, social media, investments, financial positioning. So we literally take a 360 look at a person in their business lane, and then we parallel that with individuals professionally. What are they trying to do in their professional line of work?
Now, there are a lot of organizations for women by women, which I think is great. I mean, and it wasn't always like that. Do you think that empowering through these type of events is effective way to, I guess, get people interested in investing in something for their future? because I'm always looking for ways to try to get people to understand that you can't get from here to there without understanding real estate, because that's how most people do it.
Right. And yes, I think it is. I think it allows a more intimate platform to create that exposure,
Right.
understanding where people are,
Right.
and then establishing, whether it's training programs, mentoring, coaching, avenues for them to take to then build from. And the other thing with the Women's Prosperity Network, so I was just speaking about what we're doing locally, but on a national scale, they have conferences and training. In fact, there's one coming up in London called The Business of Speaking, where they actually teach not how to stand up and speak like Toastmasters, but
Right.
literally how to speak and ask for the sale. Because there's an art in that. And how do you close? How do you close effectively?
I see. No, there is. There absolutely is. You have to ask somebody, will you please buy this? And,
Yes.
we experienced it a little bit recently when my wife went to buy a car, and the salesperson was adept at actually asking for a signature on the contract several times. They kept asking until we actually signed. It was good. She was excellent.
And, it's interesting that for whatever reason, women do not do that as well as men overall.
I see.
I think we are more, we take a more passive approach when it comes to asking for a sale, and you know how that works. It's not going to happen.
No, and I think being more aggressive, or at least helping people to understand that that's a good thing, not a bad thing, is
Right.
probably something that is sorely needed.
Exactly, and it's showing the value. You get away from the selling the price, focus on selling the value.
Right.
And then at some point, the price really won't matter as much if they can see the intrinsic value and what it is that you're offering.
Luana, thanks very much for coming on the show, giving us an update about what you're doing now and also what's happening in the Atlanta market. Thank you very much.
Oh, thank you.
Thank you very much. It's been Luana Bradford from the Bradford Group. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, telephone number. Pick up the phone, give us a call. You can write that number down, too. And you can call us later with a question. You can certainly email us, info@malibufunding.net, with any question that you might have about what you heard on the show today, and any questions that you're going to have about, pending rates, some programs, things like that. We try to keep it informative as to exactly what's happening today on the micro level, and in so doing, I wanted to touch on some interest rates that are out there. By the way, interest rates have come down 0.5 point in the last 3 weeks, which is a good thing for people who are trying to squeeze into house prices that are continuing to rise. I know I said earlier in the show that we're looking possibly at a recession later in this year, early next year, but currently, January in 2019, we are actually seeing price increases of about 4 to 5% this month, year over year, and we will probably continue to see that through the first quarter. Couple of the things, as I said, for rates, 30-year fixed 4.5%, which is a very good rate. If you're out there right now and you're looking to buy a house, now is a good time to do it mortgage-wise. Inventory, and we got to that on several things of inventory in San Francisco and up in the Tahoe area. Yeah, so we're going to continue to look at rising inventory. And I think the reason for that is because people are a little priced out of the market because of the rising home prices. And therefore, what we have is a more settling into a buyer-seller equality in the marketplace. I don't think we're going to see an exact equality, which is about 5.5 months of inventory, and that's how we usually gauge these things. Last summer, we had about 3.5 months of inventory, and in some cities, we didn't have three weeks of inventory. But what we're trying to get to is balance in the marketplace where you have 6 months of inventory, and then when you get into contract or you get an offer, there's only one, maybe two, and then you negotiate with the buyer and the seller, and then negotiate equally so that at the end of the deal, as I've always said, both parties are unhappy but satisfied. And that is really the way that I think you have to look at a lot of negotiations, not necessarily what we're looking at with either opening the federal government again or trade policy with China or any number of other things that come out of certain areas. You know, most people, Daryl, let me ask you a question about negotiation.
Sure.
When you go into a negotiation, either with an employer or a potential employee, how do you enter it? Do you look to gain advantage, or are you looking for a win-win in these situations?
Definitely a win-win, because if you, especially if somebody you're going to work with over a long period of time, if you win and they quote unquote lose, they're going to be sad in a fairly short period of time once they realize that they've lost. You know, one of the goals of negotiation is not to make the other party feel that they've lost, feel that they, tell them what the advantage of their position is that they've accepted. But once they figure out that they got the raw end of the deal, they're going to be sad. So, no, I definitely win-win is still very important.
Yeah, I agree with you. I think that when we talk about what's happening internationally, and everybody goes, well, how does that affect me here in San Bernardino or over in Riverside or in Covina or, Rancho or any number of communities in the area that we talk to? How does international trade negotiations affect my real estate here? Well, it does. It affects it in the way by which you may or may not understand. It's really simple. China supplies the U.S. with probably 60 to 70% of the products that you buy every day. And if those products are more expensive, that means that money that you could spend on your mortgage is now spent on products that you used to get cheaper just because there's no trade agreement with China. You can say, well, what do you mean? I said, well, steel, for one thing. Cost of steel has gone up. And the reason steel's gone up is because China has slapped a lot of import tax on the steel that they either import or export back to the U.S. And the funny thing is, the U.S. will take raw materials, send it to China. They will hone it into the finished product, and then they'll send it back to the U.S. in order to make the products, or vice versa. It's a very odd thing. And when they're calculating certain things like trade deficit, it gets really confusing because the on-book, off-book calculations of whether it's hold, sell, or traded is really something that only a mathematician and an economist can figure out. So when you hear the numbers of the trade deficit is this or the trade surplus is this, I don't know if it actually affects the average human being. But steel prices do. Commodity prices do. If we slap a commodity tax on soybean, for instance, China decides not to buy soybean. Well, let's say you're a soybean farmer. And by the way, we grow soybeans in California. We grow a lot of things in California that are now on that list of tariffs. So therefore, the poor guy or gal who's trying to sell soybeans to China now just saw the costs selling it to China triple or whatever the tax may be, and therefore they lost a customer. So what are those people supposed to do? Yes, it does affect you. All of these things affect you. And in the negotiation that's going on right now with either China or the Congress over the wall or a number of other negotiated elements that the federal government is responsible for, yes, it affects your life. Yes, it is important. And when it affects your bottom line to whereby the money you used to be able to spend on your mortgage, you're now going to spend on this other nonsense. Yeah, it as Daryl said, you begin to understand you're getting the raw end of the deal and you're not even in the negotiation. I think that there are certain strategies that if they come true are a good thing, but cutting taxes is only one way to help the consumer. Other ways are to try to make things as smooth and easy as possible. Now, we've got things in San Bernardino and Riverside counties, right? We've got manufacturing, we've got healthcare. Healthcare is the biggest industry in California, by the way, and with 36 to 39 million people here in the state, we probably only have about 15 million of those people who are working, probably have 3 to 7 million people who are over the age of 55, and most of the medical expenses in what is it, Covered California? Is that what it is?
It is.
Okay, so if you're right now one of the lucky ones who was able to get onto the insurance marketplace and buy insurance, without the mandate that was to have been, continued, it was voted out last year during the Republican Congress, paying for your medical expenses, whether it's medication, whether it's doctor's visits, for those 3 to 7 million people. Now, we're talking about people on Medicaid. We're talking about elderly people on Medi-Cal. We're talking about children. We're talking about people who really can't afford it themselves. Yeah, unless we have a long-term solution in the healthcare in both California and nationally, it's going to affect your bottom dollar to go out there and afford a mortgage. You've got an elderly parent. You've got a sick child. You yourself need long-term care or have medicine that you need to buy each and every week. All of these decisions that are made at the federal level affect us here in California. And because our real estate prices continue to go up, affording it without the ability to be able to know exactly what your health care costs affects us. So these are kind of the problems that we deal with every day in California. You're dealing with it all the time, aren't you, Daryl?
Yeah, and the sad part is that what they now say is if you can't afford to buy the insurance, we're going to slap you with a penalty for not having it.
Well,
which makes no sense.
Well, the problem is that in order to afford health care, how are you going to pay for it? Now, I don't know if we should tax rich people more, but it's an issue and we have to solve it. Otherwise, as California age and the population here gets older, how are we supposed to handle that? How are you and I supposed to pay for health insurance and also pay for rent or the mortgage? It gets to be difficult.
But if it's something you can't afford already, to go ahead and penalize you for not spending money that you don't have.
You know what? It was a calculation in the program of Obamacare that was the worst thing, but the only thing that they could get to make the math make sense. So the math doesn't make sense, and people go underinsured, and people who are underinsured who show up and try to get health care can't get health care, or you have to pay for it because your taxes are going to go up. It's just one or the other.
Yeah, they say, it's just $5 a day. Well, that's $150 a month that some people just don't have, and that's the difference between being able to eat or not.
And I think all of this affects how real estate, and this is one of the reasons why in California we're probably looking at 4 to 4.5% rise in real estate this year, as opposed to last year, which was 6.5%. It may even be less. Anyway, I'm Jeff Barton. I really appreciate you listening to the show today, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.